Good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Wall Street's rally bolsters sentiment as investors look for further conviction on the Fed's rate path. The focus now turns to the U.S. jobs report, which may show hiring cooled in October. An unusually swift verdict. It took a jury less than 5 hours to find Sam Bankman-Freed guilty of all 7 counts of fraud and conspiracy. And Apple warns of a sluggish holiday quarter ahead. Share slump. CEO Tim Cook struggles to assure Wall Street that iPhone demand remains strong in China. It's been a heck of a week for the bond markets, from Lagarde to Bailey to Powell. They're all trying to push this narrative that they're at the top and we're in pause. This is the space of a week for 10-year government bond in the United States of America. We've dropped from a high of 30 base, 493, down to 462. Flatteners are in. 2s 10s, 2s 30s have had the biggest flattener in a number of months. So, of course, the question is, fool me once, shame on me. Fool me twice, shame on you. Or is it the other way around? The bottom line is, do you believe this rally? That's what you need to ask yourself here. Franklin Templeton, Citadel Securities, and K2 all say to us, do not get overly enthusiastic. Curb your enthusiasm. Was this the tail that wagged the global bond dog yesterday? This is the UK government gilt market. The bottom line for the gilt market is Bailey pushing back at, you expect rate cuts? No, that's not where we are. Now, the bottom line is this. The betting by the bond market is that central banks have actually broken something. They've already gone into a quasi-policy era, and they're going to have to cut, and they're going to have to cut more aggressively next year. That is part of the flatteners. That's part of the narrative of this drop in yields. You've got the dollar index dropping, again, the biggest weekly loss in 3 months. It's about indigestion and doubt. That's what Kit Jukes said it is. Indigestion in the bond markets, indigestion in the dollar market. Let's see. Danny Berger, good morning. It's Friday. It's Jobs Day. Forgot to mention that.
Oh, yeah, that old chestnut. Look, it's an interesting setup for this equity market into Jobs Day. A massive rally of more than 1.5% across basically every single benchmark index. It ebbs a bit today. It was the best day since April yesterday. It was also heading for the best week at this point since November of last year for this equity market. So maybe not surprising. We're selling down 0.1%. NASDAQ, though, underperforms, down 0.4%. How much of this is Apple coming to crash the rally party? Pre-market Apple down more than 3% last I looked. That should be on the bottom of your screen so you can check it out for yourself. There you go. Apple down nearly more than 3.33%. And then we have European equities maybe continuing the rally thanks to where Wall Street closed yesterday, up 0.33% in Europe. We also had SocGen earnings. Profit fell. There was also some wrong way bets on interest rates. Even so, SocGen shares so far in today's trade are higher by nearly 1%. So, Manus, this is the situation we have. You had the NASDAQ, S&P, Russell 2000, and TLT all rally yesterday, more than 1.5%. That's the first time all of those assets have done that since January of this year. And let me show you what that's done to FCON. Financial conditions, at least the U.S. index compiled by Bloomberg, is now almost back at zero. Man, as for all that talk that the bond market's doing the work for the Fed, we're almost in easy conditions again.
Listen, you're just so happy that you find the best fact of the day. That is the bottom
it's
line
a good one,
for you.
Right?
Yeah, you had an extra hour's sleep, so you decided to go find a fact and out Trump me. But you're right. The whole heavy lifting that the bond market did is perhaps not for naught, but of course it is Jobs Day. Today could define. We're expecting 157, a lighter number than 326s, which we had in the last month. Is this the beginning of the edifice of the slowdown? Just look at the Maersk numbers this morning in terms of job cuts. So the narrative is shifting. But you see, this is what happens when you get an extra hour's sleep, many extra hours sleep.
I spent it in Excel, basically.
You built in Excel. You built in Excel on a Friday morning.
Yeah, no, because I had more sleep than you, I just opened up Excel and built a model this morning. That's all. No big deal.
That's what she does in her spare time. OK, let's talk about Sam Bankman-Freed, because he's been convicted of a massive fraud that led to the collapse of the entire empire of FTX. The U.S. attorney for the Southern District of New York, Damian Williams, spoke after the verdict.
The cryptocurrency industry might be new. The players like Sam Bankman-Fried might be new. this kind of fraud, this kind of corruption is as old as time, and we have no patience for it.
She's got a lot of patience. Sonali Basak, she's chased this trial for weeks. Sonali, good to see you. Thanks for getting up early. He perpetrated one of the biggest financial frauds in American history. This was the attorney, his words. Your take, I mean, are you surprised? I mean, some of the sentence, well, we haven't got the sentencing yet, but some of this is quite staggering.
Yeah, it is quite staggering. I think what's more surprising is how quickly the jury had come out with the verdict. It was within a span of less than 5 hours. And remember, the timeline could have pushed into next week. They stayed late. They were given cars last night from Southern District to make it home. They stayed beyond yesterday what they were meant to initially. And so the way that this was done after really just a matter of weeks, it felt long if you were sitting inside of it, but the prosecution was very organized. They had 3 cooperating witnesses who had pled guilty, who were very close members of the inner circle. It's not that surprising that at the end of the day he testified. We know he likes to speak for himself. There's still a long road ahead for Sam Bankman-Freed as well as the others here. The sentencing is not slated until March.
So what happens next then? What does that long road look like for Sam Bankman-Freed?
Yeah, you have to remember that he's still facing other charges. So as part of this trial, he had been found guilty by a jury for 7 charges, but he also faces charges related to campaign finance and bribery. And so he will potentially be retried for those charges as well on top of this. And as far as the sentencing goes, very unclear how long he might be facing prison time. Each of the charges he was already facing guilty verdicts for could face up to 20 years in prison each. So is he going to be spending life or some sort of reduced sentence? And same goes for his former colleagues who had also pled guilty for reduced sentences. Will they spend any time in jail is still unclear.
So if you look at Bitcoin overnight, of course, it's dealing with, you know, will there be an ETF regulation come through? You know, we're dealing with the machinations of that. Where do you, or what feeling do you get from the marketplace that this is, for want of better words, a Damascene moment for crypto, that this is a clearing out perhaps of things that will not be tolerated again, or perhaps Wall Street won't be duped again in the way that it was, and they just went, hey, Sam, how much do you want from me?
Let's start with the Wall Street side of that, because overnight you had Sequoia partner Alfred Lin, who had tweeted about the verdict here. And really you saw Sequoia, which was really one of the key players in the investment community here, who had written a 14,000-word, really love song, let's call it, to Sam Bankman-Freed.
Ode to Sam.
Ode to Sam. And now they are coming out and saying, you know, we, like many others, were deceived. So you have them immediately distancing themselves. You have another large investor, Anthony Scaramucci, who had spoken to us this week. FTX had invested in his Skybridge. We asked about whether his relationships, particularly those in the Middle East, were tarnished or took a hit in the wake of what had happened at FTX, because Anthony Scaramucci was the man who took Sam Bankman-Fried to meet the Crown Prince of Saudi Arabia and try to seek rescue financing or new equity financing. And he did say that, yes, initially this was a reputational hit, but a lot of investors are now dealing with the fallout. Crypto industry itself distancing themselves from FTX, but a lot of consumer advocates coming to the surface and really saying that Sam Bankman-Fried was not a one-off in bad behavior in the industry.
Yeah, not even to mention the fallout for Tom Brady and Larry David. Sonali, thank you so much for helping us cover this. Bloomberg, Sonali Basak there on SBF. Let's turn to our other top story of the morning. Apple has warned that investors won't see the rebound in growth that they were hoping for. The tech giant faces a slowdown in China and a possible sluggish holiday quarter. Joining us now is Matt Bloxham of Bloomberg Intelligence. Matt, when it comes to the China issue, was there any clear indication of how much the political element played into iPhone and future iPhone sales? That is, China banning iPhones for state companies and for government positions.
There wasn't, and if anything, it was the kind of the flip side of that. They had a record quarter on iPhone sales in China, and Tim Cook was optimistic about the prospects of the market. So I think, you know, that was quite interesting in its own right. And it was other products that were weak for them in China in the quarter's report. You had a $2 billion miss on revenue, expectation for 10% growth, it's ranked 2%, so it really was a kind of big miss on those other products. I think probably this holiday quarter is going to be a bigger challenge for them in China, because you'll get a full quarter of this new Huawei Mate device, which just suddenly kind of launched onto the market, surprised everybody, and it's been really popular in China, so that may kind of create some more headwinds, and I think that's going to, you know, temper investors' confidence in the China story, I think, for a few quarters to come.
And yet, ironically, you know, the iPhone sales, I mean, I know it was Mac and iPad that caused them a bit of pain, but iPhone quarterly revenue in China was a record. This is the fourth straight quarter of decline. Okay, so this is the longest run of decline since 2001. You'll hear people holler from the gods that this is peak Apple and it's over. But you know, what does Cook need to do? Is it down to AI, generative AI? They're investing quite a bit. How did the market look at that?
Yeah, I mean, again, they were muted on what they'd say about that, but I think that is going to be an important part of future product refreshes, and I think that's, for me, one of the important things from this year. If you look at the product lines that were either weak last quarter or expected to be weak in the holiday quarter, it's product lines where there hasn't been a refresh for quite some time, iPad, or the refresh has been fairly low-key. So I think product refresh cycle is really important, and AI is going to come into that in a really big way.
Well, I know Manus isn't buying me a new iPhone for Christmas, so
I am in the market for a new iPhone. I am in the market for a new iPhone. I'm trying to. I am. I've got 3 old ones, and so I'm looking for the trade-in value. So I am. But my poor phone still thinks it lives in Dubai. If the poor phone doesn't know it's actually physically moved and got a visa.
You know what I'm hearing from you, Manus? You've become the hedonistic American. That's what I'm hearing from you.
There you go. That's a toxic marriage. A hedonist Irishman living in the Middle East who's come to live in America. There you go. I'll leave you with that thought.
I love it. Hey, Matt. Thanks for joining us and for dealing with us. Matt Boxham of Bloomberg Intelligence there. All right, Manus, let's get to some of the other top stories that are trending on the terminal this morning. Jeff Bezos, he's moving to Miami. The Amazon founder and world's third richest man says he's leaving his home of 29 years in Seattle. The move takes him closer to his parents and to his space exploration company's operations in the region. Miami has emerged as a popular destination for other tycoons, including Ken Griffin.
Well, Maersk, a bellwether for global trade, is down more than 9% after saying it's cutting at least 10,000 jobs to shield profitability. The personnel reductions, equivalent to 9% of the headcount, are prompted by lower freight rates, increased competition in marine transport. About 6,500 of those positions have already been eliminated.
Israel says a ceasefire isn't on the table with Hamas as Antony Blinken arrived in Tel Aviv for talks. He is meeting with Benjamin Netanyahu, the war cabinet, and President Isaac Herzog. Indications of further spillover could come in a speech by the leader of Lebanon-based Hezbollah later today. Manus.
Coming up, we have a conversation with Germany's Vice Chancellor. Anna Edwards is on the ground. Robert Habeck joins her, talking about the current geopolitical climate amid the Israel-Hamas war. Stay tuned for that one-to-one. Anna Edwards and Robert Habeck right here on Bloomberg Brief.
This is Bloomberg Brief. Danny Berger in London, Manus Cranny in New York. Now, a year on from Europe's energy crisis, German Vice Chancellor Robert Habeck is in London to meet with the UK's energy secretary. Bloomberg's Anna Edwards is there, here with him now. Anna.
Danny, good morning, and Manus, thank you very much for having us. Let's get straight into the conversation with Germany's Vice Chancellor, Minister for Economic Affairs and Climate Action, Robert Habeck. Vice Chancellor, thank you very much for coming to speak to us today. Let's start our conversation on some of the geopolitical themes that the world is watching very closely. You put out a video yesterday talking about your concerns around a rise in anti-Semitism in Germany, expressing concern about that. How widespread is that fear, do you think? Why did you feel you wanted to make those points yesterday?
Yeah, good morning. Thanks for having me. The video was targeted, I can say, to the German population and society and people, but maybe the concern is broader than only Germany. But as I'm a minister for Germany, so I speak to the German people. For me, it seems like, compared to other horrible events, the solidarity with Israel is very, very weak, or seems to be weak, only on a rhetorical basis. Therefore, I just tried to divide the things and say, okay, the suffering in Gaza is terrible, but of course, Israel has all the right to protect itself. And in Germany, we have a special history. We have to support Israel. That was the sense of the video.
You're right that lots of Western governments are also dealing with these same questions. How do you allow people to show support if they wish to for the Palestinian people, but at the same time make it clear that you don't want people to be supporting Hamas, and that is not tolerable in Europe. How do you find the line? Because lots of Western governments are dealing with the same issue.
Well, first of all, it's a line that the pro-Palestine demonstrations have to draw themselves. I'm also for a sovereign state for Palestine and the Palestinian people. And I think that the suffering is horrible, and they have also the right for solidarity and humanitarian aid and so on and so on. But saying that and demonstrating for that does not mean to do anything, any relativism on the terrible slaughtering Hamas has had. So they have to draw a line themselves and say, we want to help the Palestinian people, but we don't accept Hamas. Hamas is not fighting for the Palestinian people, they are fighting to destroy Israel. And this has to be clear all the time.
And why did you feel the need to speak out on this? Should it be Olaf Scholz who is leading this conversation, the German Chancellor? Why is it left to you as Vice Chancellor with all your other ministerial responsibilities to make these points?
Well, he does it all the time, actually. Olaf Scholz, he holds the speeches in the German parliament and in international conferences.
You don't think he's getting the message wrong at all on
No,
this?
he's doing a great job, as a lot of leaders of the world are now doing a great job trying to ease the situation. Right now, Secretary Blinken is again in Israel, and I know that the US government, President Biden and Secretary Blinken, they are really working hard with the Israeli government, as we do, to give them support in this difficult situation for Israel, but also making clear that also Israel has to stick to the rules of international law.
Thinking about US foreign policy, you mentioned Anthony Blinken travelling just there. There might be concern in parts of Europe about funding for Ukraine in the context of Israel and Hamas. Are you concerned in Germany that funding for Ukraine will be caught up in US domestic politics?
No, I'm sure that US will stick to the promises they have made, as Europe and Germany has done, and we have to stick to the promises, otherwise that was all only words. And of course I'm concerned as the war in Ukraine is ongoing, and as we are talking here, also people are dying there, and the next winter is coming, so the situation is all but easy. But we gave them all support and promised all support, and we have to stick to that. And I'm sure that the US government, the US people and the German and European people will do that.
But war in Ukraine, clearly a humanitarian disaster, but also had an impact on German business, on the costs of energy, and led to a lot of transformation in the German energy market. You've had to change policy on coal as a result. But recently your former minister, Finance Minister Christian Lindner said this week that Germany should end dreams of phasing out coal-fired power in 2030. Do you share that view?
Well, first of all, we had to change the politics on gas, natural gas, because half of our gas supply was coming from Russia, and that we don't want to have anymore, and we don't get anymore because Putin first stopped the gas supply, and then now the pipelines are destroyed, as I guess also everyone knows. Therefore, we needed a little bit more coal. We let the coal power plants a little bit more longer in the system. But now the security issue is more or less solved. We were able to build up LNG terminals with incredible speed. We have now 3 operational and 3 more coming over the winter. And then we would have enough gas to go back to plan A. And therefore,
so you can phase out coal by 2030?
Yes, absolutely, yes.
That is the plan?
Yes.
And so no more winters reliant on coal? Or how many more winters reliant on coal or using coal?
It's a phase out, so every 1.5 years some coal power plants will go out of order.
Yeah.
And the most important decision was made on the European level. We increased the CO2 taxation we have on CO2. That means that the market will solve the problem. It won't. I think after 2030 you won't earn money with coal power plants anymore.
On another theme in energy, Siemens Energy, I know you're in conversation with them. There might be limitations to what you can say about loan guarantees. But can you see any situation in which the German government puts cash into Siemens Energy or takes a stake in Siemens Energy? Is that part of the conversation?
It's not about cash. Siemens Energy.
Are those things ruled out?
And first of all, it's important to understand that this is not a political problem, others than Uniper that was reliable on Russian gas, and suddenly the war and then the gas was gone. Or Lufthansa, for example, and the COVID-19 crisis happened. So this had nothing to do with the companies in itself. Other here, they have a self-made problem. that they bought a Spanish wind turbine company, Gamesa,
Yes.
and the turbines are not working properly. So this is a problem in itself. On the other hand, Siemens Energy has a huge amount of orders, 100 and more billion of orders are in their portfolio. So they don't need cash. They need a guarantee that they can do the work.
Okay.
And it's different, and we are in talks with everyone to ease also or to solve these situations.
Okay, let me turn to German politics. You've been quite outspoken. We talked about what you've been saying on Israel-Hamas recently, but on the economic side, you've been outspoken criticising some of the coalition policies, a coalition that you are a part of. I wonder why you are. What are you trying to achieve by criticising some of the policies around subsidies, a lack of investment in renewables, those kinds of things?
Well, I was not criticizing our coalition as I am part of our coalition. I was just raising the question that if all the rules we have adopted in the past 30 years are fitting to the world order, I can say, as we find it now. So China is a friendly open market, cheap gas from Russia, no wars anywhere. We can save money by not investing in our military capacities. This was basically the mindset of the past 3 decades. And this is, I mean, the gas from Russia is gone. China is a competitioner, to say the least. And we see that wars are happening again. So, and then to ask if our budget rules, our European rules, our federal system is adjusted right, I think is necessary.
It just sounded to some as if you were providing more of an opposition than being part of the coalition. Is this actually something to do with campaigning for 2025? Are we already there yet? Is that what we're seeing in German politics?
Not at all, and it has something to do with thinking. And I think thinking should be allowed in politics.
And Christian Lindner, has he given his reaction to your comments?
I haven't seen any reaction.
No, has he given any reaction? Is he?
Well, we stick to the rules we have given our coalition in when we started it, and this is also what I intend to do. We stick to the rules, or we change them together. But this is not going to happen, I guess, not in the budget. But still, this cannot mean that it's forbidden to think about the situation as we face it. I mean, it would be the same in the US. You are raising your budget all the time, or try to raise it, and then you have your US internal problems and debates. And but there seems to be a demand for more money, and this is everywhere the case. If the goods from China are very, very cheap and we won't buy them in the critical fields of technique and so on, then we have to produce them ourselves. Then they are more expensive. Then we have to ask the question, who's going to pay for that? So this is obvious, and this is an objective question, and this was the only one I was raising.
Vice Chancellor, thank you very much. Germany's Vice Chancellor Robert Habeck and Minister for Economic Affairs and Climate Action. Manus, Danny, back to you.
Anna, great conversation there. That's Anna Edwards with the German Vice Chancellor Robert Habeck. Breaking news on Bloomberg. Saudi splashing the cash again, we understand, ready to make a $5 billion investment. This time in the Indian Cricket League. Danny and I will talk cricket and sport in just a moment. Of course, we'll talk strategy as well. We won't leave you bereft at 5:30 in New York. We've got Karim Chedid, Head of Investment Strategy. Where do you want to take your risk on the morning after Apple? Welcome back to Bloomberg Brief. I'm Manus Cranny in New York.
And I'm Danny Berger in London. Here's what you need to know. Wall Street's rally bolsters sentiment as investors look for further conviction on the Fed's rate path. Our focus now turns to U.S. jobs report, which may show hiring cooled in October. And an unusually swift verdict. It only took a jury less than 5 hours to find Sam Bankman-Freed guilty of all 7 counts of fraud and conspiracy. And Apple warns of a sluggish holiday quarter ahead. Share slump as CEO Tim Cook struggles to assure Wall Street that iPhone demand remains strong in China. Some of that Apple pre-market trade is raining on the parade of this big old equity rally we saw yesterday. The best day for stocks since April. We're headed towards the best week for this equity market since November, but we are down on the pre-market trade. 0.5% for S&P 500 futures. NASDAQ just less than 0.5%. Again, it does seem to be Apple dragging us there, down more than 3% so far this morning. European stocks having a better go of it, Manus. European equities up about 0.2%. They have SocGen even rallying today. A miss on their earnings, profit was hurt, made some wrong way bets on things like interest rates, but even so, they're up. Not tons, but about 0.5% there, too. But overall, Manis, it's my fun fact of the day. So, of course, I got to say it again. It's the first time since January that all of the American equity indexes and TLT have rallied more than 1.5%.
And for all our viewers out there who want the Excel spreadsheet, contact Danny on the IB. That's what she does in her spare time.
Yeah, I'll send
well
it.
Done. Fact of the day. Don't worry, I will rob that in a moment. Now, the bottom line is for the bond market. I mean, we've seen a 30-bip range in 10-year government bond yields this week. You're just seeing ever such a small incremental rise this morning. The bottom line for the bond market, I mean, the gilt market dropped by 18 basis points yesterday. It's ticking up by 1. Let's not get emotional. But the gilt market essentially moved and gave heft to everything else because the bond market does not believe the higher for an enduring longer period of time. The bond market is convinced that central banks are going to break something, and in breaking something, they're going to have to cut rates more aggressively than you and I think. And with that in mind, that is why you're seeing this downward trajectory in yield in the US and in the United Kingdom. Bailey pushing back, saying we are going to be sufficiently restrictive for sufficiently long. And he pushed back very aggressively with Guy Johnson. If the market thinks we're going to cut, you're wrong. I want to push back against that. So you need to understand whether you believe that you're an enduring pause or that the central bankers are wrong. I'm talking about Lagarde, I'm talking about Bailey, and I'm talking about Powell. The dollar index itself is down ever so slightly this morning, but we have the biggest weekly loss in 3 months. It's got indigestion. I like what Kit Dukes had to say, Danny. The dollar is potentially showing signs of indigestion and doubt. And that, Ms. Berger, is your big risk for the supply coming down the pike in the United States of America and those bond yields. Danny.
Well, I mean, to some degree, you got to hope the supply shakes things up because, I mean, that curve flattener yesterday is so painful for everyone out there who literally just came out and said it's time to get into steepeners. It is very 2023 for a consensus to come out and then swiftly be punished.
And to be fair to you, it was your math. It's the biggest curve flattener since March. She did that on an Excel spreadsheet this morning. So if you think my divinity comes for free, it comes from her. Danny, good morning.
I clearly have too much time. Free time in the mornings, Manis.
Far too much time.
Yeah, fair enough. All right. I mean, I think I spent it okay. But, okay, Manis, let's get to the stock futures this morning. Because as I pointed out, they are pairing some of those gains after a strong day yesterday. Best day since April. Our next guest, he's been on the road. He's been talking to clients in 10 different countries. It is BlackRock's Karim Chedid. And he writes that after those conversations, client consensus is positioned for recession this year through going underweight equities and overweight duration. Karim joins us now. He's the head of investment strategy for iShares EMEA at BlackRock. Karim, great to see you. Maybe as to what I was just saying to Manis, I mean, yesterday was painful for someone whose positions were that underweight equities and overweight duration. So is that kind of client consensus unwinding now?
Yeah, I mean, I agree with your comments, Danny. This year, trend has not been your friend. You know, you can't trust the trend because it does switch around, which means that the analysis of flows and positioning, which I spend a lot of time doing, is crucial in this environment to find out where the crowded trades are. And that's why I look at ETF flows in that, through that lens. But I think that, yeah, we have picked up a couple of consensus areas, whether it's going long duration, perhaps a little bit too soon, although over the past couple of days, obviously that rally we've seen in bonds would have been in that, favorable for those in that position. But I think it's gone a little bit too far. And, if we take a step back and we think about what's happened this week across all the central banks, we heard one message loud and clear, which is high rates are here to stay. So we need to take that into consideration as we look at some of this market pricing, perhaps getting a little bit ahead of itself.
And,
this is one of those magic moments in television. I'm going to let Danny continue the conversation because I've lost all communication. So I'll leave that with you, with Danny and Karim. I'll be back in just a moment. The magic of TV.
Manis is the voice of God. See, we can't see him, but we can hear him. He's around there somewhere. Okay, so that's really interesting. But, I mean, I guess the point that we're also hearing from central banks isn't just higher for longer, but they're not ready to talk about cuts. We heard that from Lagarde. We heard that from Andrew Bailey yesterday. But this is a market that is primed for cuts in 2024. Are we going to need to see an unwinding of that position, too? Do we trust the central bankers or trust some of the deteriorating data?
Well, that's where we need to look at the data and consider, the inflation and growth trade-off, which is the good thing is that it's not new. We've been following this for the past couple of years as we look at some of the pandemic trends unwinding, with the services inflation coming down, goods but still sticky, goods inflation having already unwound. The question is, how much are central banks going to keep focused on those inflation targets? And I think what we've heard from them is that they will still focus on them. So I would believe that message, and I would lean against some of the big market moves we've seen in the past week. If I look at the stock markets for a second, it's really the long duration stuff that have really outperformed over the past couple of days, even unprofitable small tech. It's not the high quality stocks, it's the really long duration segments of the market. I'm not sure I'm ready to lean into that trade yet.
Karim, I think I have good news. I think Manus is no longer just a voice. I think he's a face now, too. Is that right, Manus?
I've come back to life. You thought you'd escape, Karim. No, not a chance, not a chance. Yeah. Let's pick up on that theme, because that's very much what I was saying when I was looking at the bond market, which was Bailey was pushing back. Of course, the accusation is that Bailey's going to be the highest for the very longest in the UK. But if you look at that repricing in duration, the bond market is saying, central banks, you are wrong. You're breaking something, and you're going to have to cut quite aggressively next year. I think that's the message for me that the bond market is giving me this week. How do you see that narrative? Do you think it's just too soon to buy that narrative, that they're going to be aggressive and higher for longer and on the top of Table Mountain for a lot longer?
Yeah, so I do think there's some regional nuance to that question. You spoke about the UK, and we turned overweight on UK gilts from a tactical view perspective. So we were ready to extend that duration view over the past couple of months for precisely this reason, which is that markets had priced in a pretty high rate for longer path in the UK in a way that they hadn't done in the US. So this rally that we've been seeing in gilts, this big move towards pricing no rate cuts on the horizon to pricing 2 cuts by end of 2024, that's something that has been favorable in terms of the view that we've held. It's in line with the view that we've held. The question is, has it gone too far? And that's something we're debating live, but I think that regional nuance is important to bear in mind, especially because in the UK the damage is greater. In the US we have had some cushion from savings that have kept consumers quite. And
I think, to be fair, the structure, the interest rate structured exposure, both of domestic, let's say of retail people like Danny and myself and yourself buying a home here, is structurally different to it is in the UK. We were both, exactly. I mean, obviously we've got SocGen numbers this morning. It's interesting. It's had a fairly tough time since the new CEO took over. But can we ask you about your view on US regional banks? It was a source of angst and great global angst in the springtime. But Bill Gross wrote this overnight. I mean, he rocked the bond market last week. Now he's rocking regional banks. Regional bank falling knife has hit a bottom. I'm buying Trust, Citizens, KeyBank, First Horizon. Treasury yield picture still uncertain. The best strategy is to invest in the 2-10 curve, continuing to disinvert, and to buy 2s, sell 10s in duration neutral. I mean, we could go on, but I want to focus on really on his bank call. How do you look at banking at the moment? The KBW has had a very tough time. SocGen's had their numbers out. Things are different here in the US. Just the nuances for us.
Yeah, I think nuance is the way forward, and selectivity is the way forward in stocks in an environment where the macro, where high rates are here for longer, is not your friend. And that selectivity goes at sector level, something we've seen loud and clear in the ETF flows across sectors, with a clear preference for European banks. That has been a key preference for investors, expressing it through ETF flows in that space, and also sectors like healthcare and energy. In the US, that preference for US banks has not been as loud. I think there's a higher conviction that European banks' revenues are more cushioned, and you're also seeing it in the earnings season. European banks have been a standout performer in the earnings season that we're watching right now, more than the US.
Okay. Karim, thank you so much for joining us this morning. Really appreciate your time. That's Karim Chedid of BlackRock. All right, Manus, I have a number I want to talk about. It is $5 billion. That is the amount that Saudi has said to eye in the Indian Cricket League. That would value it at $30 billion. So there you go, Manus. Another day, another headline crossing of a potential Saudi sport investment.
Yeah, I mean, this builds on the narrative, doesn't it, Danny? Which is, you know, if you can't bringing in the star footballers like Ronaldo, etc. The view is, of course, you can bring in the footballers into Saudi Arabia, but will people watch more matches? Here we are with cricket. We've got a bid out there for the PGA. Of course, the PGA have begun formal process of reviewing other investors into their business. But this is India. I mean, this is a $30 billion Indian cricket league. That's just monster. And in terms of the audience, is the physical audience.
Yeah, it's monster, but it is interesting because Bloomberg spoke with Ben Stokes. He's the captain of the England cricket team, as I know very well as a recent newly minted Brit myself. Before this deal, he had even said you can't compete with money, especially the money that Saudi Arabia is throwing around to certain people. So there almost seems to be this idea in the cricket community, not just that they'll invest in international cricket, but maybe they'll try to bring it back home to Saudi too. Yeah, I mean, it's going to be interesting to see how the political response in that comes through from Narendra Modi. Of course, MBS is very focused on this entire sports narrative destination, Saudi Arabia. Well, we'll keep an eye on that story. Where's Greg Tanner when you need him for the sports narrative, yeah? No, he's on a beach somewhere. Does he do cricket?
No, he's on a beach somewhere, probably on the Palm, having a glorious Friday afternoon and a couple of caipirinhas. We're going to talk Apple next. There's a thought for you on a Friday morning at 5:41 a.m. A caipirinha somewhere in the sun. Apple warns the holiday season may not be just so happy as it struggles to get the sales out the door. How enduring will the slowdown be? Right here on Bloomberg.
We're seeing a very uneven economic environment right now, but we do expect that there actually will be an economic slowdown and that organizations are going to have to manage that. This is not the go-go era of 5-10 years ago where we can expect 30-40% growth in any category in perpetuity. We are going to see some slowdown. We expect to see some slowdown in cloud. It has not happened yet as a result of the big AI boom that we're experiencing, but even that has its limits in the short term.
That was Maribel Lopez, founder, principal analyst at Lopez Research, speaking about the slowdown in tech. And shares in Apple, they're falling pre-market this morning, disappointing holiday outlook, and a slower sales number in China. Stock down 3.33%. Mandeep Singh, Bloomberg Intelligence senior global tech analyst. What a lovely line from Maribel. It's not the go-go time that we had from 20 years ago. And of course, Apple. It's 4 quarters in a row of disappointment. They haven't seen that since 20 years ago. So how lack of go-go has Apple got? Or am I mistaken?
No, I mean, if you look at their numbers, the top line clearly hasn't delivered. And there is that sentiment that, top line will remain flat for a while. But they keep delivering double-digit EPS growth. And that's a combination of price increases, share buybacks, and look, this company knows how to pull the levers. At the end of the day, they own the distribution when it comes to, internet and everything that we do.
And Mandeep, Danny here in London, great to speak with you. This was also supposed to be the time, right, that we saw weakness in iPhone China sales with all those iPhone bans for state companies and for governments. We didn't see that, though. Instead, it was other products. What do you make of that mix of product sales for Apple in China?
Yeah, look, I think the China number was about 2 billion below consensus. So clearly, there is that soft demand aspect with regards to China. And some of that could be due to the ban and, the other things that we have seen play out in the region. But iPhone still, the 15 cycle isn't playing out as big of an upgrade that we expected, simply because I think what consumers are finding is the feature difference isn't that big. And so that, to me, is somewhat of a concern. But with Apple, time and again, we have seen, even if they will have 4 to 5 quarters, they will have a big upgrade cycle. And that, I think, is probably delayed to next year.
What's the big, we'll move on from Apple in just a second. What's my biggest risk with Apple? And what could be the biggest, absolute flabbergasting thing that you just caught you that goes like that and really puffs something out of nowhere?
Yeah, so the biggest risk is the services growth. And we know within that services growth is the $20 billion in payments coming from Google's to Apple in terms of being that default.
Right.
That is a big chunk of that. And if something happens to that, clearly that services line isn't going to grow. The biggest upside catalyst could be just the upgrade cycle. We know every large tech company is focusing on Gen AI. They're focusing more on the Gen AI compute. When you look at Amazon, Microsoft, and Google, Apple can have Gen AI on their chips within the devices. That could drive a big refresh cycle across their product lineup. And also the Vision Pro. Don't take that out. That's coming in 2024, and that could be huge in terms of a new category.
Mandeep, now that we have all of these tech earnings in the bag, is there any clear leader when it comes to some of the AI progress? Is there anyone who has such a head start lead here that it seems it could be sustainable?
I mean, right now it's clearly Microsoft because they have quantified that Gen AI tailwind. They said it's going to be 3 percentage points of growth on the Azure side. And we know, right now Gen AI investments are being made for training these large language models. That's why you need the GPU compute. Microsoft has a clear lead in that front. But, when you look at Google and Amazon, both of them are well positioned on the cloud side. It's just Microsoft has a double tailwind, if I can use that term, from compute as well as Copilot launches. They just launched their 365 Copilot, so that's going to add to more incremental revenue.
We caught up last week when I was on surveillance. We talked a little bit about margin. Who's the margin blockbuster in this? If our audience tune in this morning and go, who's going to hold their margins the best? Who do you think that is at the end of this reporting season?
Well, so I think Apple clearly is showing they can deliver on the margin front. They had the highest gross margin in a quarter where revenue was flat, and that was partially due to the fact that they can pass on the price increases on everything that they sell, whether it's the product side, the hardware, as well as the services. They raise prices for all their services.
Okay, as you say, they're in control of that supply system. So let's see whether they can continue to squeeze the margin. There you go. Apple is a bit lighter on its feet this morning, down 3 1/3%. Mandeep Singh, our resident Bloomberg Intelligence. We're going to give you a quick snapshot of the bond market. It was the UK market that dropped by 18 basis points yesterday. Bailey pushed back on the narrative that he was going to cut rates next year. You've just seen a little bit of reprieve in 10-year government bond yields this morning. US Treasuries also trading a little bit higher. We've just had BlackRock with us saying, do not be convinced that this monster drop in yield is something that is going to continue and endure. You may have some flashbacks. The spread between Germany and Italy also compresses ever so slightly to 188 basis points. That spread is the one to watch. Good morning from New York and London on Bloomberg Brief.
Welcome back to Bloomberg Brief. I'm Danny Berger in London. Manish Krani is in New York. Let's get you set up for your trading day with a look at what's ahead. The main event is the U.S. payrolls report that will hit at 8:30 a.m. Eastern. The survey is for 180,000 jobs have been added in the month of October. Then we're going to get some more data. 9:45, we're going to get ISM services and PMI. PMI hits at 9:45, ISM at 10 a.m. And don't miss our exclusive interview with Atlanta Fed President Raphael Bostic. That's at 3:30 p.m. Vice Chair for Supervision Michael Barr and Minneapolis Fed President Neil Kashkari will also be speaking today as well. Manis.
Well, let's keep an eye on some of these stocks. So you got SocGen trading. Of course, this is Slavomir Krupa. He's been sat in the seat for 6 months. This is the CEO. He stepped up. He was the head of investment banking when he joined you and I, Danny. He talked about massive bonuses. They never let us speak to him again. SocGen's up despite the drop in the numbers, the earnings way. The results failed to shake off the negative narrative. And Maersk, of course, there as well, down 10%. They're set to cut 10,000 jobs. Freight rates are under pressure as well as profitability. I think a lot of those job cuts have already been announced, Danny.
Yeah, and I should say it's not Maersk only cutting jobs. It's also NIO. They're the Chinese EV maker. Their shares, though, rose. The CEO saying that they're going to cut about 10% of its staff. Okay, so this is a Chinese EV maker, but the point still stands, Manus. We are hearing just this anecdotal evidence, at least now, of jobs coming in, at least when it comes to things like EV and industrials. We're going to get jobs today. The survey is for 180. The whisper number, though, is 200,000, so a little bit stronger on that front.
I'm not sure what time the whisper function closes out on Bloomberg. I think the interesting thing is going to be, that boom that you had in those services sectors like leisure and hospitality. Does that fade as we come to the end of revenge tourism? We were talking about this yesterday, that revenge spending, revenge tourism narrative may be coming to an end. Unemployment rate 3.9%. Again, in the 12-month basis, I found a fact, unlike you, I did not build an Excel spreadsheet this morning because my time's a bit more compressed than yours. But that's risen by 0.43 in the past 12 months. So it's incrementally rising. What Danny Berger does on Friday mornings, she builds spreadsheets and, just delves into the math. Good morning.
I promise you that's not how I spend my Friday nights. If that's any comfort, I leave the spreadsheet building for the morning. All right, that's it for us on Brief. Surveillance, that's up ahead.